Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market trades for June the 23rd, 2010. Now, taking a look back at our Great Britain US trade that we had for today, I should say, very good trading day. We can see that we've got the profit calculator up here from Vantage Point. I was recommending using the short-term crossover. We were actually using the short-term crossover to point us in the direction in which we should be trading. So the short-term crossover crossed to the downside. We can see this, and instead of getting into a counter trend position, what we did, we used that short-term crossover to the downside to basically show us that the market was going to move lower, but to stay in the buy position. And when it gets down to our bottom area where we want to get in, then that's exactly what we do. We jump in. So what I'd suggest is the market would move back towards the 146.85, 146.90 area. That's exactly what it did. And then essentially it shot all the way up. We can see here at the high of the day up to the 148.59. So basically we picked up almost 160 pips on this trade for a profit of $1,570. Very nice trade. Now again, we didn't get into counter trend positions. Even though the short-term crossover was to the downside, again, we very seldomly trade off that. We use that as a directional indicator, and then we use basically the direction of the overall trend to get into the position. Now, key thing I want to point out here is that if you trade against the trend and against this major crossover, you have a less than 50% chance of being correct or getting into a winning position, where this way, patiently waiting for a trade to come back, using those short-term indicators basically against themselves, showing the market is going to dip a little bit lower, and then using that to get into a buy position can be very, very productive, as shown here today. Now for tomorrow, we're still looking at the Great Britain US trade. I still see this as having further upside potential. So let's go back in and see if we can repeat that again tomorrow using these same indicators. Now, looking at the daily report for tomorrow, we can see that we've got a predicted low of 147.14 and a high of 149.16. We notice here that the neural index and the short-term crossover were both to the downside. We use that neural index pointing down and the short-term crossover, which is the predicted short-term differences, being negative, to use that to get in to a buy position. We're going to do the exact same thing today. We're going to let the market pull back to the 147.14 area, and then we're going to get into, again, we want to get into a buy position. Now, the reason again I'm saying that is we have our medium and long-term crossovers are very clearly saying that this thing is going to continue to move up. The short-term indicator, again, is just that, a short-term indicator. We're not interested in trading off it at this particular time. So we've got our predicted true strength indicator from Vantage Points continuing to move higher, not quite in overbought territory yet, and the predicted MACD also confirming that. Predicted medium and long-term differences also well above the zero line in positive territory. So we're going to look to, again, we've closed at 148.10. We're going to continue to play this range with an upward bias on the British pound and a downward bias on the US dollar. Now, that's our first position for tonight. Now, for our second position, we're going to go into the commodities market, specifically gold contracts. Now, looking at the gold contracts, we can see we've closed at 1239.9. Another pretty strong close, but it's weakening. Now, again, we're going to use the same type of trading strategy here that we're using with British pound US dollar, that we've used in natural gas, that we've used in a number of other different contracts. And that's specifically, we're going to use short-term weakness. We're going to use the short-term crossover to the downside to show us what the real trade is, the medium and longer term position of what we should be getting into. Now, looking at this, we can see that the crossover is taking place to the downside. That's warning us that gold is likely going to move lower. Now, because it's going to move lower, do we want to get into a counter trend position? No, we don't. The medium-term crossover is still to the upside, as is the long-term crossover. And it's very important to recognize this style of trading in order to be successful in a lot of different markets. Now, again, we've got our medium and long-term outlook is still clearly up on gold. Our triple EMA crossover also fully supportive of that. Our predicted MACD, a bit of a mixed signal. Predicted true strength indicator still supportive of further longs. So let's go in and have a look at the daily report here and see if we can fine-tune this entry point. We can see that we've got the triple EMA crossover still holding in that buy position. Short term, little shaky shaky. We can see that we've got the neural index to the downside, the short-term crossover also to the downside. Very similar, again, to what we had yesterday in the British pound US dollar, only for it to use that short-term weakness to get a better position on our buy position on our longs. So essentially this is what your better traders will do. What they will do is they'll look to exploit this short-term corrective move and then focus on what the overall trend is. Now again, much like gold, the overall trend is very clearly to the upside. The last thing you want to do is sell in an uptrend. Your chances of getting into a winning trade, if you go against the trade, your chances of being successful are less than 50%. So right off the bat, getting into that counter trend position, you immediately put the odds against you when you try and sell contracts and pick tops and pick bottoms. We don't want to get into that. So we've got 1230.20 and 1248.30. That's our range for tomorrow. So we want to exploit that range. We've closed at 1139, which is that's still a pretty decent close. So what we're going to do is we're going to exploit that short-term weakness using those short-term indicators to get into the buy position. So we're looking for a move back towards 1230.20 tomorrow. When it does, we're going to use that to get into our buy position. So those are the market positions for June the 23rd, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.